In 1978, China was one of the poorest countries on Earth. Today, it claims the world's second-largest economy, worth over $17 trillion. But what if that miracle was a mirage? What if the skyscrapers, highways, and ghost cities are hiding a $7 trillion economic time bomb? Let's find out. This isn't just about China. It's about how the world measures success and what happens when that metric becomes a lie. In just 4 decades, China transformed itself from rural poverty to global power. But today, behind the polished skyline lies a crumbling foundation. Vacant cities, failing developers, vanishing growth, and the same economy that once inspired the world might now be the one to destabilize it. Let's rewind to where it all began. In 1978, China was barely recovering from decades of war, famine, and political purges. Its GDP per capita was less than $200. The vast majority of the population lived in the countryside under strict communist controls. Private property didn't exist. Foreign trade was nearly non-existent. Then came Deng Xiaoping. Unlike Mao, Deng wasn't interested in ideology, he wanted results. He famously declared, "It doesn't matter whether a cat is black or white, as long as it catches mice." That mindset sparked one of the most radical economic shifts in modern history. Deng opened up China's special economic zones, places like Shenzhen, inviting foreign companies, loosening regulations, and allowing market incentives to work inside a still authoritarian state. The results were explosive. Between 1980 and 2008, GDP grew by double digits almost every year. Over 700 million people were lifted out of poverty. China became the world's factory, producing everything from toys to microchips. By 2001, China joined the WTO, and by 2008, it had become the third largest economy in the world. But beneath the celebration, a dangerous pattern was forming. China's rise didn't just rely on exports or manufacturing, it depended on construction, and a lot of it. To hit GDP targets set by the Communist Party, local officials began building non-stop. Skyscrapers in cities no one lived in, high-speed rail stations with no passengers, whole urban districts built overnight with zero demand. Why? Because in China's economic system, building equals growth. It doesn't matter if a mall is empty or if an apartment stays vacant for 10 years. As long as cement is poured, workers are paid, and loans are issued, it counts as GDP. By 2023, China had over 65 million vacant apartments, a road network stretching 4.6 million kilometers, enough to circle the Earth 115 times. Entire ghost cities like Kangbashi, built for 1 million people, but housing less than 100,000. All of this boosted GDP numbers and investor confidence, but none of it was sustainable. These places weren't built for people, they were built to collapse. By 2024, the cracks were no longer theoretical. Developers like Evergrande and Country Garden, once symbols of China's rise, began defaulting on hundreds of billions in debt. Evergrande alone failed to repay over $300 billion, triggering a shockwave across global markets. Construction halted, ghost cities stayed empty, and millions of Chinese citizens who had poured their life savings into off-plan homes were left with nothing. Meanwhile, China's youth unemployment quietly soared to 15.7%, until the government simply stopped publishing the data. And local governments, deeply in debt, turned to shadow financing vehicles just to stay afloat. It's not just a real estate bubble, it's a systemic breakdown. The Chinese government still reports 5% annual GDP growth, but that number no longer reflects consumer demand or innovation. It reflects state-directed construction, statistical distortions, and debt-driven inertia. But the problems run deeper than buildings. In the US, 68% of GDP comes from household consumption. In China, just 39%, among the lowest in the world. Why? Generational trauma, decades of famine, political chaos, and poverty instilled a cultural mindset of saving over spending. The 4-2-1 burden. One worker supports 2 parents, plus 4 grandparents, thanks to the now abandoned one-child policy. With limited pensions and skyrocketing elder care costs, saving is survival. Weak safety nets. The average hospital stay in China costs $1,100 to $1,300. That's nearly 17% of the average annual income. Nowhere safe to invest. China's stock market hasn't grown in nearly 2 decades. 401k-style retirement systems don't exist, and most high-growth companies remain state-controlled, off-limits to the average citizen. So what do people do? They save, they hoard cash, or they pour it into real estate, which is now collapsing. It's a vicious cycle. Low spending, slower growth, more construction, more debt, lower confidence. This brings us to the heart of the problem. China's national debt now exceeds $14 trillion, but $7 trillion of that is tied directly to local government financing vehicles, used to fund unnecessary construction. These shadowy debt instruments don't show up in official stats, but they're collapsing behind the scenes. Why does this matter? Because these debts were built on the assumption of perpetual growth. Growth that never really existed. Vacant cities, phantom GDP, a generation of savers with nowhere to go, and a government, too, committed to the illusion of strength to admit its system is cracking. China's collapse won't look like a crash. It will look like stagnation. Years of slow decline, debt rollovers, unfinished buildings, and more government spin. But make no mistake, the consequences are global. Falling demand from China means lower global growth. Excess supply means price wars and deflationary pressure. Capital flight could shake emerging markets, and confidence in state-led economic models may never recover. For decades, China was held up as the future, but behind the miracle was a $7 trillion lie, and the world is just starting to wake up. If you found this eye-opening, subscribe to 360 Economy, where global policy meets your paycheck, and tell us below, do you think China can pull off a course correction, or is the decline already locked in?